Okay, so this was sort of my expectation today. Somewhat of a, I guess, an initial sell-off and then a recovery. It didn't quite happen the way I liked it to, because I never can really imagine that the event are kind of like almost predictable nowadays. I think because Jerome Powell already spoke recently. It wasn't that long ago where he spoke. I forget exactly where, but it wasn't too long ago, and the reaction from that, I believe, here, that was in October 19th. So the reaction right here was kind of a precursor, and that's not that long ago. That was only like a couple of weeks ago. So the reaction right here was, I guess, sort of what, you know, already a precursor to what's going to happen today. I should have just realized that instead of thinking it was going to be more of a sell off. And the reason I thought it was going to be more of a sell off is because I just thought the shorts were going to be a little bit stronger, but they were very weak. I mean, throughout the whole day, they were very weak. There wasn't a lot of puts being bought, and I think it was the writing was on the wall early, right? You can see, um, initially, like I said, the results of today was, I mean, this came in lower than expected, and also the ISM came in lower than expected, and these are positive for the stock market. Um, and if you I guess if you wake up early, right, and you can actually make quite a bit knowing that the reaction, um, and this looks like it's a spike condition, but if you look at the 1 minute, it allowed you to get in, and it was already a positive bias for the day. And I think the other one came at 10 o'clock. So at 10 o'clock right here, right? Boom, started going up, that reaction, positive. So, like I said, I go by three aspect as far as where the market is gonna go. I go with basically fundamentals, um, forward looking, and technical. Now, those three, you don't know which one is gonna be one, two, and three. They move around depending on the situation of the day. Today was very technical, but there's also a component to forward looking, right? I was saying how these forward looking data, when I was looking at yesterday, were gonna be positive bias to the market. And right enough, right? The pre market was up the whole day, the whole sentiment was pretty much up. Went to the 60-minute trend line, sort of reversed, and during the Feds, the volume was so low, went down to the 5 minute. So right now, I'm seeing a lot of technical behaviors. Um, you can look at this 5 minute trend line, and you can see it's very technical, and it's staying above it. Also on the QQQ, right? It's staying above it. Now it's at a level that normally I don't really look at is the 200 SMA, the 200 simple moving average, but it is at that level. Um, I was expecting it to hit the 220 EMA. So the MACD is going up, okay, and these MACD on the 60s are not as strong right now. I mean, it's kind of looked like it's broken again. Because here it went up and it should have gone down. And doing this down right here, I was expecting it to, pretty much stay neutral or stay flat. and it's not staying flat. So that is kind of disappointing because I do look for flat condition, and right now it's not flat. So there may be a period here right now where it may stay flat around this level. If we look at the SPY and see if there's a potential for a flat. Tomorrow, no, there's no potential for a flat, unfortunately, because you do have Apple earnings coming up, right? So, let me see. Qualcomm beat earnings, and let's see how that look on Qualcomm. I can just punch it in here. Let's see how that look. Right, Qualcomm. They did beat earnings, so that is a positive catalyst or positive aspect to forward-looking analysis. Toyota Motor, I don't really care about. PayPal. Let's see how PayPal looks. PYPL. That I guess it did beat earnings. PayPal is such a dog. Wow, such a dog. Look at this guy is so. Yeah, I guess I have no idea. And there is so much data, unfortunately, that I can't go through everything. I mean, there's just so much data on. There's just so much data, and I just can't go through everything, unfortunately. And I know I'm gonna miss something, obviously, but I think if I just stick with the cake and Humana missed, right? I did started adding position to my 401k today. So I guess I am bullish for the short term, even though I think I've kind of messed up now that I think about it, because Apple earnings may I may have to bail out tomorrow because I'm worried about this Apple earnings. It was kind of a spur of the moment buy. Um, so tomorrow I'm expecting Apple to hit this 50 EMA. Just because it should be a positive day tomorrow. If you look at what happened today, what the Fed says was pretty good according to what I can tell, and I'll play this video at the end. Just so if you want to watch it, you can. If not, you don't have to. But going forward, like he was saying how this jolt openings, uh, was this a negative catalyst? Well, it was a negative catalyst before, but now it's a positive catalyst. And let's look at tomorrow. Like this challenger job cuts, right? I'm thinking this potentially is another positive catalyst. I don't know why, but I'm thinking it may be higher, the challenger job cuts, or whatever the number comes out. I'm expecting the traders to react positively to it. Don't know why. I just think it will. Um, But I am worried about Apple, so I am expecting Thursday to be good. And the thing about Apple is Apple, it may just be one day, so to speak, right? It may just be the reaction after hours, taking it down. Shorts are gonna hit it, and then tomorrow I don't know where it gaps, but eventually it'll build a base and start being positive. Now, is there a chance I can hit this level tomorrow? Yes. After hours? Yes. I do think that is the target after hours. The 20 EMA on the monthly, so somewhere about 165 is the target. Um, if you want to risk buying it, and I'm not gonna say that it's gonna bounce from this level. I just think it's gonna hit this level, and there's a potential for a bounce tomorrow after hitting this level, because we saw that with AMD, which I thought, missed earnings yesterday, and apparently it wasn't too bad, I guess. But if you were to look at this in the extended hours, yesterday, yeah, it was completely bad, right? So I'm thinking it's be something like this for Apple. I don't think it's gonna be covered like that. I'm assuming this is forward-looking and guidance, right? Forward-looking guidance and then short squeeze, right? I didn't even realize it. If I had I realized this, I probably would have bought Apple. I mean AMD. But I just don't focus on stock as much. I focus more on the indexes. But yeah, I mean the thing was these guys are showing a lot of clues today. I was like, those puts are not coming in, and the calls were just kept coming in. I mean, even looking at the SPY, it was pretty technical, and I didn't even realize it. But there is a here I do plot uh this is the EMA and this is the SMA. So okay, yeah, it didn't go down to it regardless. But yeah, the volumes were coming in on the puts. I mean on the call options, right? I can see that throughout the whole time, and I was like, this is not going to be that negative, right? And they kept, it kept coming in. But if you look on the put side, I mean, these are dead in the water. I don't even know why anyone. But if you look at this guy, there should have been some volume on it during the Fed announcement, right? Because at that time, it's coming down here, it was just so weak. I mean, this was a clear signal to me that it was going higher for the day. I am carrying a weighted straddle on the positive side. So 2 lots of puts sold with 1 lots of call sold. So I'm expecting somewhat of a sideways movement tomorrow. And the reason I have to carry the straddle is because of Apple, unfortunately. I'm just worried, forward looking. I'm worried about this guy because this is gonna be the big enchilada after hours on Thursday, which is essentially Friday, right? So I definitely don't want to carry any puts, especially that I got 2 legs of puts. So I may have to cover those puts tomorrow. And also get out of those positions I bought in my 401k, unfortunately, because I would hate for it to miss. And there's a pretty good there's a good probability of it missing if you look at all the economic data. And there's a China component that is, it's gonna be a big component. It's the China component that is going to bring Apple down with respect to the numbers and also with guidance. So, not exactly sure if they even give guidance anymore, but it's just too much of a risk for me to carry those. Right now it is up. Expecting a target. Unfortunately, the 1 hour isn't gonna show much. It's just been, there has been no consolidation period. Normally, there's a consolidation period so that the 1 hour will kind of readjust, but there is none. So it goes straight to the 4 hours. The target is gonna be this guy. That's gonna be the target right there. And the reason why that target comes about, most likely, if things lines up, these numbers are gonna be treated favorably by the traders. and because it's treated favorably, it's gonna go up. Like I said, there's gonna be two sessions, morning session and afternoon session. And so toward the afternoon, I'm probably gonna say it's not gonna end high of day like today. And did it close end of high of day? It probably didn't close high of day today. Close to closing high of day. Close to it. So what would be the target tomorrow? I would assume it's gonna hit this 220 EMA on the SPX. Is that the same for the SPY? Yeah. So I don't know if that's gonna line up to this guy or not. Um, or this is probably gonna move down a little bit. So we'll see if it gets close to it. But the MACD, since it's been behaving technically, I guess there is still this technical component to it. So this MACD, I guess there's always a possibility that it's reverse on the MACD, right? So there's a chance that this MACD can go negative and it can be a reversal tomorrow. That would be disappointing. The only reason that would be happen would be this guy. Somehow this challenging job cuts come in, job cuts. If there's like no job cuts, right? And what else? The initial jobless claim. If this come in like no initial jobless claims, what else? Productivity, total vehicle sales. I mean, most these numbers should come in, more or less decent to what the traders expect. And if it's a little bit favorably, it's gonna go up. Right. So there's no reason for me to be bearish forward looking. Technically, it still looks fairly positive. I mean the options today was very let me see. This is for tomorrow. I mean, there's some options here, but that's for there's also some option on the calls. So I don't know. All I can say is it's not it's probably gonna be. I would have to lean positive. I can't see anything negative right now to say. Um, did anything miss after hours today? Probably not. I mean, they got Qualcomm. That's pretty. PayPal missed a little bit, and that's about it. The financial has been strong. That's the other thing. Let's look at the financials. Right, the financial has been sort of strong after that Jamie Dimon, yeah, the whole Jamie Dimon thing, and now it kind of reversed, and it's at a technical level, unfortunately. Unfortunately, that's a technical level. The other thing is the bonds has kind of gone down, so that's also favorably. So this is a big thing, right? Let's take a look at the daily. Yeah, so that is a pause. So this, I don't see anything negative. I don't see anything negative, right? Gold is kind of retracing. The dollar kind of reversing. Oil still low. Medical. Yeah. So I don't know if I don't have the housing, but that's the one thing. The housing can the housing is gonna probably derail the economy. At a certain point, there's gonna be a detachment or what I can't find the right word for it, but eventually the economy is gonna matter, and that's gonna matter when the housing market breaks. Right now, the economy, if the economy is negative, that's going to be positive for the stock market. So there's a divergent, inverse correlation, so to speak. But eventually, it's going to go back to the way it should be. Is because the reason that is going to be the case is because they know the Feds has to hold interest rate at a certain level, and now the economy is breaking. So that's going to happen. Just we don't. It's not going to happen anytime soon. And that's going to happen when I guess the mortgage rates, and I don't have a way of plotting the mortgage rates, but this sort of correlates with it, I guess. So taking it day by day, everything is quite positive for tomorrow, and I gotta get out of my position, unfortunately. Unfortunately, for because Apple, I don't know why Apple, man, it's kind of like they lined it up perfectly. Why did Apple line up to release earnings? Um, And the thing is, I might buy a straddle. That probably would be something that would be good, is to buy a straddle for November 3rd, which is the Friday option expiration, knowing that Apple is going to, I can't buy a straddle for Apple because the options for Apple is going to be expensive. But the options for the SPY, let's say right now, it closed at 422. So there's about a $5 movement or a $5 intrinsic value on. I would like it to be at a $3. So I'll see tomorrow if it's a good deal to buy $3 worth of intrinsic value, knowing that the SPY might move 5 points. Yeah. See, the thing, if Apple beats earning, it's not gonna beat it by that much. But if it miss earnings, it's gonna be one of those things where it breaks everything. Apple will break everything. The technicals won't matter. Once Apple miss, if they miss badly, it's just gonna be hit the sell button. Tremendous gap down. The technicals won't matter anymore. You're probably gonna gap down to a huge number. What would be that number? Maybe even be 4,200, right? And then you're like, what is it gonna do? If, it's probably just gonna keep going down and scare you out. So I definitely don't want to hold any long position, and may have to get out of those stocks that I bought in my 401k tomorrow, and I should be able to get out of them. Yeah, I was thinking prematurely. I forgot about Apple, and that happens very often. Is there's so much things going on, and my memory can't hold every single thing. Um, so I'm not gonna go through all these videos during the recording. So, but I will play this guy because I like to listen to what he says.
So let's get started. Wow, first things first with Jay Powell, no papers, no iPad, this time a teleprompter with his wording, and this is a big deal. The first thing he says he has his eye on, 8% mortgage rates. Housing was something he really hit on multiple times here. Housing flattened out at the moment. Now his, quote, mind's eye goes to the near 8% mortgage rates and, quote, we're getting reports the effects of this, high mortgage rates, on housing, quote, could be quite significant. That is a big warning flag for the housing market. And it's one that at my startup, which has a fundraise ending today, wealthhack.com, read the offering circular. The fundraise actually closes tonight at 11:59 p.m. So learn about that tonight or at househack.com. But anyway, talking about Jay Powell, he vacillated a few times by saying interest rates right now are restrictive, but we're trying to get confident that we are sufficiently restrictive enough. He suggested once that he was committed to achieving sufficiently restrictive rates. It was sort of confusing because he's saying rates are restrictive. So are they sufficiently restrictive? I think he's purposely trying to be a little vacillating in his wording here, or vacillating in his wording, because he doesn't know. That's the thing. He even went as far as suggesting the summary of economic projections we get at the Fed meetings are good for like the day they write them, and then you throw them away. The dot plot basically has been wrong every single time they've written it. Every single projection they've given has been wrong, pretty much. So who cares about the projections? The point is, what is the snapshot for today? The snapshot for today sounds pretty well like J. Powell is comfortable keeping rates here and just watching the progress we're making on inflation and jobs continue. Seeing more of that supply chain normalization lead to disinflation. What was really interesting, though, was how he redefined the economy and the next phase. So this is going to take a little bit of thinking. So follow along with this. First of all, he said for like over 2 years now that the economy is probably going to have to grow below trend. Those have always been his words. He's always been saying we got to get the economy growing below trend. And everybody's like, all right, well, the trend is 2%. So what you're saying is the economy needs to go below trend. Well, today, he actually totally redefined this. And this was like yet another Jerome Powell flip-flop. It's kind of like one day the JOLTS report matters, and then the JOLTS report doesn't matter anymore. One day, one survey matters, and the next it doesn't matter anymore. It was like just a few months ago, he's complaining about the employment cost index and how we got to see that come down. Today, he's like, it's pretty good. We're doing good on the ECI, which was actually surprising because just 2 days ago when the ECI report came out, employment cost index, the survey was 1%, came in at 1.1, and J. Powell's like, that's reaffirming the downward trend. We're doing good here. But going back to this redefinition he just came up with today, I feel like sometimes he just pulls this stuff out of thin air. But anyway, now he's saying, well, we're not actually saying the economy has to go below 2% growth. What we're saying is we want the economy to be below its potential growth. Oh, good Lord. Okay, so how do we understand this? Well, a simple way to understand it is with numbers. Let's say that right now in Q3, the economy is growing at 4.9%. Let's say potential growth for the economy for the next year is 3%. Okay, trend is 2%, potential is 3%. He's saying, well, we just want the economy to grow below that potential now, which is actually a dovish thing to say. And it's probably why towards the end of this event, the NASDAQ started rallying straight up, basically. That's probably why, because J. Powell's really relaxing this idea that, oh yeah, we've got a lot more work to do on rate hikes. I think we're done. I think by this redefinition, he's made it pretty clear we don't need to keep raising rates. He's comfortable if things continue the way they are, inflation's going to continue trending down. It already is trending down, and he's comfortable that we're on a good trend. However, he also expects it to be lumpy. I kind of think about it like weight loss. Like you go scale and you're like, whoa, it's not like you're losing half a pound a day and you're out hard and it's like, it's not changing. Anyway, that lumpiness, I think, is what J. Powell's conveying here. That look, like we're doing good. He seemed very bullish about that actually today. Dare I say dovish? Like, look, hey, we're doing good, man. Jobs are coming down, into balance. We've got inflation coming down. Let's just stay on this trend. And expectations are good. Oil's not skyrocketing because of the Middle East. Brent is at 84, 82 right now. You realize that's like the trend for the year. It's been a little below, it's been a little above, but nothing, basically no reaction from Israel in oil prices right now, which that's historic, but people, supply chain portion of the disinflation. He's worried that that might not get us all the way to 2%, that we're actually going to have to see labor markets softening to get the extra like 0.5% or the extra 75 basis points to break us down to 2%. That part I think is a little bit of a risk, but it's not one I think we can really speculate on now because it's so long away. Like, let's get the supply chains 100% in balance. My opinion is you probably don't actually have to break the labor market. That supply chains and capitalism and the disinflation of how capitalistic markets work will drive that disinflation down to 2% the decade prior to the inflation. Now, J. Powell made it clear, though, that While he doesn't know, that is a concern of his and the committees, that they are going to have to do more in terms of breaking the labor market to really get the last bit of inflation down, that last bit of weight loss, that last little bit of starvation that to get to your goal. Fortunately, that's still a ways out. That's probably something we're going to be discussing next year around this time, because we're still seeing the effects of supply chains in the labor market of industries, with the exception of ski resorts and aerospace, where you still have these supply chain issues. Now, when we look at our bingo card, this is what I got for bingo. We talked a little bit about Congress and a potential debt ceiling crisis.